Hey friends, Kevin Goehring here, your Sacramento Stockton area Realtor lender here with this week's weekly real estate report. Wow, okay, so always a lot going on and this is kind of exciting times, maybe not in the best way, but let's take a look at the chart and let me show you what's going on this week in the real estate market. Well, let's start down here with the available homes. All right, so good news, we are headed up a little bit after a little bit of a break, but now we're kind of headed back up. Now is typically this time of year is when we start to see it really start to go up. So we look at historical averages. Starting around April is when we start to see kind of a nice climb starting to go up. So taking a look at pending sales, kind of leveled off right there. Now, what is the normal for that? So normally what we're going to see is the pending sales tend to peak and start going back the other way about the end of May, beginning of June, looking at historical averages. So I'm kind of hoping to see that maybe pick up a little bit, but like I keep saying, we just don't have the inventory to really support a huge sale market. All right, so what is that doing to the median sales price? Well, for the longest time, we were holding steady right about 570. We jumped up towards 600, dropped back down this week to about 570. Now, of course, the big news is rates. So what did rates do this week? Rates jumped up to 5%. So it's the first time we've seen 5% in 10 years. Now, again, got to warn you, 5% is still historically a decent rate. We're just not used to it. You talk to your grandparents and people who remember back in the day when it was 18, 19%. We talked about that last week. So 5% overall is not bad. But you talk to the same grandparents, what'd you pay for your house? Gosh, I remember my grandmother bought her house for $8,000 and of course was just terrified. How were they going to make this payment on this $8,000 house? I mean, good luck finding a car for $8,000 these days, right? All right, so looking at some numbers, what does this mean? So if we go back to Thanksgiving, hey, remember Thanksgiving? Well, back in Thanksgiving, we were looking at an average or the median sales price was $536 at 3%. So back in Thanksgiving, if you bought the median sales price house with 20% down, you were looking at a payment of just under $2,500 a month. A lot of money, yes. Let's fast forward all the way to today, which is not that much far away. The median sales price is around $600,000. It dropped a little bit this week, but $600,000, the rate is now 5%. So if you're buying around the median sales price at 5%, you're looking at a payment of $3,321. That's a difference. It's a jump from buying the median price back in Thanksgiving to today. Your payment went up $835. Well, if we want to compare just what the rate did, if you bought your house back in November at the median price and you bought the same median price house at the same price, but just look at the rate difference, it would be a payment jump of almost $500. So yep, rates are going up and home prices are going up. Yeah, I wish sales are going up. Prices are going up. What does that mean? A lot of people are saying, well, you're just losing buyers. Well, the way I kind of look at it is, you have a pool of buyers who are looking in a certain price range. So if we go back several weeks ago, we had people looking in the, we'll say 800 range. They're now probably looking in the 700 range. People who are looking in the 600 are down the 500. People in the 500 can't find anything because there's really nothing out there under $500,000. So kind of what I see is everybody's moving down in brackets and a lot of people are being pushed aside and saying, you can't buy a house anymore because you just can't afford it. This is definitely going to have an effect. Not only are home prices going up, obviously, or I should say the payments are going up, but everything else is. I don't have to tell you that. You know that. So not to throw out a bunch of bad news, but that is what's going on. And of course, that brings me to, hey, why do I do this every week? Well, thinking about that and wanted to express to you the reason why I do this every week is I want my clients to be informed. I want you to make decisions based upon the facts, not a salesperson's opinion. Somebody once said, never ask the opinion of somebody who has something to gain over your decision. In other words, if you're going to buy a new car, don't go to the lot with your old car and ask the salesperson, do you think I should keep my car or buy a new one? Because what do you think they're going to say? They think you should buy a new one. So same thing goes with homes. Hey, should I buy now? Should I wait? Well, I want you to have the facts because it's your money that we're talking about. So, but if you're going to ask me, should you buy now or wait? Hey, that's a tough question. You've got the facts in front of you. Rates are going up. Home prices are likely to come down because of it. Now, keep in mind that you can always buy a house at a lower price with a high rate and refinance into a better payment. But if you buy a very expensive house at a very low rate, you're never going to refinance out of that low rate. And let's also just throw this out there real quick that I've always been a big proponent of fixed rate mortgages. For those people who might have gotten adjustables, rates are going to start going up. So is your adjustable. This is a good example of how you can't refinance out of it. And this is what happened in the last housing bubble trouble that we had. A lot of loan officers convinced people to take out adjustable rate mortgages on homes they couldn't really afford because they could afford the initial payment on that adjustable. And then the line was, well, just take this rate right now on this adjustable, get into that house. The home is going to appreciate. You're going to have equity. Then you can refinance into a lower rate because you have equity. Well, let this be an example. This is what I've always cautioned you against. Great in theory, but home prices went up, rates went up, and now you wouldn't be able to refinance into a lower rate because of that. So anyway, that's, I guess, your economic lesson for today. But before I go, if anybody's still watching, I want to throw out a chart real quick because this just floored me. Bring this over. This is the M1 money supply chart. And what this chart is the amount of money available in the United States, M1 chart. And if you can look at the amount of money available, basically from 1960, even up to, 2009, 2010, we're low. We're like below 2 billion. But let me zoom this in just a little bit. And where have we gone just since 2020? I mean, we were holding about 4 billion and then we jumped up to about 5 billion. And then the very next month, we're at 16.2 billion in available funds. And it just keeps climbing. And again, this chart shows the amount of money basically available to the public or our money supply here in America. And you can just wonder or see right there why we're having such an inflation issue. Everybody has money apparently. And now things are much more expensive and now it seems like we don't have the money. So anyway, great news, right? Hey, thanks for watching. I hope you guys have a great weekend and I will talk to you next week. Bye.